So, meaning when consumers perceive the economy to be great and people have extra discretionary spend, they tend to invest in these assets. And then when they kind of contract, when they start to tighten belts, so to speak, these asset classes are the ones that get retreated from first. So, it could be end of the year, kind of typical cycles, people prepping for holidays, people trying to tax lost harvest perhaps, or just maybe consumer sentiment saying stocks are inherently risky. We're going to a more risk off model right now. There's uncertainty in the eastern part of the world and the western part of the world. People are pulling back from more quote unquote risky assets. I'm not sure it's any more than that. I mean, we've seen kind of general stock market pullbacks as well. So I think probably that's the most, kind of a straightforward explanation.
For the last couple of years, we've seen Bitcoin move basically in line with equities. So risk on temperament means risk on with equities, risk on with Bitcoin. And this week, something has happened that's different, which is that Bitcoin is off and stocks are generally on. And that delta in movement feels like a new thing. It feels like a real change in sentiment. I'll just give you my opinion. I think Bitcoin is perhaps the dumbest way to do money you could think of. It would take you 20 minutes to complete a block on the blockchain and exponentially more and more energy year over year to continue maintaining this proof of work chain by decoding these sequence of bits. Like why? Like the only beneficiaries in first principles thinking that you could get to is some kind of theft that you'd want to hide from a government body or something. If you didn't actually care about like that level of secrecy, then there's absolutely no reason to spend this much money on energy and maintaining a decentralized blockchain.
The only other metric I would cite is credit defaults are rising. And so when you see that coincide, you see the pullback in these riskier asset classes as well historically, like if you look at across trends. And so unlike when we've seen the coupling of crypto with the creator stock market, that has been when credit defaults, especially like credit cards and like subprime rates are level, or at least reasonably level, we're seeing those go up, which means people are tapping into kind of unfavorable sources of short-term income. Typically, they're defaulting like credit defaults either on credit cards or car loans, etc. On those kind of things. And so I think that probably is again. I think what you're seeing is people have less spending power in the current economy, and one of the ways to track that is how many things are flowing into these what you would consider extra investments. I
So you're
actually
saying
agree with you. I
people
don't
need
think
money and they're selling Bitcoin to have spending money.
Yeah, that or they're just worried that their other investments are going to go down, and so they're shifting into more conservative investments. Right? They think interest rates are going to drop. Therefore, maybe T bills or something other more conservative investment become more attractive. They're just pivoting out of one asset into the other. For the people that are um, engaging with high fractions of their investments in crypto, those tend to be younger people